All right, in this lesson, we're going to go over some of the organizations that have an impact on public accounting, and so that you have an understanding of who's making up all these rules and who actually who's important in this idea of standards that we must follow. The first one is the Securities Exchange Commission. Now, theoretically speaking, the Securities Exchange Commission is only overseeing public companies. Now, a lot of times when we talk about auditing, it's for public companies. Although there are a lot of audits that are done on private companies, the topic is usually public companies, so that's why we often talk about the SEC first. But no one understands that the SEC is really public company driven, not private companies. So a company like Koch Industries, which is privately owned by the Koch brothers and not necessarily publicly owned by the people of the United States. Okay? So the Securities Exchange Commission oversees the formulation of accounting principles. Okay? So U.S. GAAP. Okay? They're the ones that oversee the responsibility of creating U.S. GAAP. Now, they delegate that accounting principle formation to the Financial Accounting Standards Board, or as we like to call FASB. Now, let's stop for a second and really talk about what that means. What that means is that the SEC is up here and they're saying, hey, look, we're responsible for U.S. GAAP. However, we're not necessarily professionals in U.S. GAAP, so we're going to delegate that task to people who really know what's going on, which is accounting professionals. So FASB, which is a nonprofit organization, is there to create U.S. GAAP. Okay, so they're responsible for it, but at the end of the day, the SEC is the one that's supposed to manage it. Okay, but they're delegating it to FASB. Now, the SEC has a lot of power, which means they can basically say, no, we don't want that, or yes, we want that. But they're having FASB here do it for them. Okay, so that's kind of how the relationship is being built when it comes to accounting principles. Now, on the other side, the flip side of the SEC, we have something called the Public Company Accounting Oversight Board, or PCAOB. This was developed, that came out of Sarbanes-Oxley of 2002. What it really provided was oversight on auditors, okay? And auditors that provide audits for public companies, hence the name Public Company Accounting Oversight Board. They are overseeing the auditors of public companies. Now, prior to the formation of the PCAOB, really the accounting industry was a self-regulated industry, which means that, with our big four, a lot of times we would have peer review. So, one of the big four would go to another big four and review their books to make sure, when we mean their books, their work, to make sure that the work they were doing was to the standards of GAAS, generally accepted auditing standards, okay? And so that's how we would regulate ourselves. And then because of the financial meltdown with Arthur Andersen and Enron, Congress thought it would be a nice thing to do is to create this quasi-government nonprofit organization called the PCAOB that would regulate auditors at the same time of what they're doing, okay? So that's what they do, but really PCAOB oversees the formation of auditing standards for publicly traded organizations. So we're going to learn in another lesson this idea of GAAS, Generally Accepted Auditing Standards. So it's not GAAP, generally, so we call it GAAS, Generally Accepted Auditing Standards, GAAS. Those are standards that auditors must follow. That's where PCAOB puts their foot in the audit industry and makes sure that we're following this public company auditing standards for auditors who audit public companies. In addition, PCAOB also goes to these auditors on a rotation basis and reviews the work. So part of the industry is still peer reviewed, but then you also have PCAOB that comes in and audit those firms that are auditing public companies. Okay? Now, we've talked about public. What about private? Well, on the private side, we have the American Institute of Certified Public Accountants, or the AICPA. It's the largest professional organization in the world. AICPA, their job is to issue auditing standards for non-public organizations and companies. So if you're auditing a private organization, the question that you should be asking is, what rules should I be following? Well, you're not going to follow PCAOBs because those are specifically for public companies, and they have specific issues that are driven for public companies that private companies do not have. And so the AICPA has a Auditing Standards Board, or ASB, that Auditing Standards Board issues auditing standards for audits of non-public companies. So when we really think about this idea of what's going on, the PCAOB worries about public companies. The ICPA, as well as the ASB, or the Auditing Standards Boards, worry about private companies. Now, we do have something called the GASB. The GASB worries about governmental audits. Okay, so we do have other organizations that fit within here, but from a public accounting standpoint, we're really dealing with the Securities Exchange Commission via the Financial Accounting Standards Board, unless you're getting in trouble by the SEC because of a public client. And we're also dealing with the PCAOB, which is overseeing the auditing standards for us public accountants who are doing public audits. Okay? If we're not doing any type of public company audits, then we have the American Institute of Certified Public Accountants, or the ICPA, and the Auditing Standards Board that issues auditing standards for us of non-public companies. So those are the organizations that affect public accounting firms and who we need to seek advice from when it comes to the audits that we complete and do.